Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the legend himself, Willem Middelkoop. He is the founder of Commodity Discovery Fund. Willem, great to see you.
Great to be back. Great to be back.
Well, it's an absolute pleasure having you join us. Willem, what the heck is going on with silver? Almost every commodity is up and inflation is here. So in your opinion, will these low prices last?
I was expecting this question, so I already prepared an answer. As you might know, silver is the only metal which is trading at 50% of its 1980 high, even less. It's 50%, over 50% down from the 1980 high.
Mhm.
And why are all metals starting to jump higher and silver is still lagging? Because silver is the most important metal for the monetary system. People always say, no, that's gold. Because central banks have been accumulating gold for, well, centuries.
Yeah.
And there's no physical silver in the vaults of the central bank. So why is silver so important for central banks and for the monetary system? Because silver is the poor man's gold. So silver is connected to gold. So once silver breaks, once we have a strong signal of silver breaking higher, moving higher, and we get this short squeeze, which will happen in the end.
Mhm.
That's the system for all people watching world's monetary system. When silver breaks higher, there's a strong chance that silver will break higher as well, and that's a huge warning sign for all what's happening in the international financial system. So they have to keep silver down for as long as possible. So they don't care if Bitcoin will run, they don't care if uranium will run, they don't care if copper will run, but they do care that when silver starts to run. And that's why you see such huge pressure to keep the silver price in check. And that's why we see these attacks on a weekly basis.
Mhm.
That's my opinion.
Europe, just to change the subject a little bit, and you're a commodity guy, Europe has had a lot of energy problems in recent months. Do you see this as a short-term thing, or is there a longer supply issue? I want to share I'm going to share a screen here that just jumped out at me. You know, natural gas storage in the European Union is really down year over year. You know, this is where we were the same time last year. I'm just wondering if you think this is a long-term issue, not just a short-term issue.
You guys might be aware of the book, The Big Reset, I wrote. But maybe you're not aware of another book I published around the same year, 2014, 2015. And the title of the other book was The Tesla Revolution. And it was explaining all about the energy transition and the world of energy. So energy has been a focus of mine for quite some time. And I think we have so many imbalances in almost every system now, the monetary system, the energy system, and especially since the Corona crisis started early 2020, we've seen so many dislocations. And we see that in the world of energy, we see that in the in monetary affairs, and we see it also with the shortages and the supply chain. And I think a perfect storm is developing in many of those systems.
Mm-hmm.
And in Europe, we had this change of beliefs. One could say that we should get rid of all things which relate to fossil fuels, and we should only concentrate on wind and solar. We had Germany turning off their nuclear energy operations. Of course, we had the geopolitical tensions between Russia and the US on Nord Stream. All of these developments have turned into a situation now in which the recovery on many markets increased demand for energy. And now we suddenly are aware that we still need oil and gas, and maybe we haven't invested enough. And but don't forget there's so much money printing going on, and the debasement of currency is making many rich investors nervous. So they're starting to invest in all the government can't print, including energy. So it's partly connected to the debasement of currency. It's partly connected with the recovery of the world economy, and it's partly connected with all these geopolitical and political developments. And so I think the energy crisis you can't disconnect from the monetary crisis, and also the food crisis. It's all connected, because food prices are also the food prices are rising because well, energy is a big part, to grow food, and actually it's getting quite scary, because it's all connected and there's so many imbalances now. And I've been a student of monetary history. I've been a student of the Weimar hyperinflation. If you read, I just reread When Money Dies about the hyperinflation in Germany in the 1920s. In the early years of the hyperinflation, there was a shortage of labor. You saw many prices starting to rise, and people didn't understand why were prices rising suddenly. And we see the same now. People are asking themselves, what's happening out there? And I think it has to do with the very first phase towards hyperinflation. And then you get these sudden jumps. Uranium just jumped 50% in a few days. And
that was Rick Rule's fault.
Well, yeah. Well, we always have 5% of our fund invested in the best uranium discoveries. So,
nice.
But even we were surprised by the sudden moves. These moves are so sudden.
Yeah.
You hardly can play them as a speculator. And I always say you have to be in it to win it. And fortunately, we had a few good uranium positions.
Well, I've heard others say the same might be true. What you just said, you have to be in it beforehand, because it happens so fast. You don't have an opportunity once it starts moving. And the same's been said about gold and silver. Once it goes, I mean, people are complaining, oh, I'm just going to wait till, but once it goes, it's too late. Because the miners that you're in, they're already gone 30% by the time it, when silver makes that $2, $3 gap, the miners are gone already. And
the physical markets were closed down within 24 hours.
Yeah.
When we really start to jump, because it's such a small market. And look what happened February last year when you guys started the Silversqueeze.
Oh yeah, retail could get wiped out in a weekend. All the retail stores,
And all silver shares shot up 20-30% at the open. And I've been investing in silver since early 2000s. And I remember there was one week in 2002 or 2003, I bought a bunch of silver stocks. And then over a period of 4 or 5 days, they jumped 100% on average.
Yeah.
Wow.
Yeah, the same thing happened with the uranium stocks a couple months ago. They were all up something like 100%, 80 or 100% within like 3 or 4 weeks.
Yeah.
I mean, they just
almost 3 or 4 days. So it will, and especially silver. Silver is so explosive. And one of my mentors is Eric Sprott, and Eric Sprott, of course, you all know him. And he's retired now, and he's the real silver bug, the OG, and he's the original silver gangster. And he always said, once the silver manipulation fails, you'll see $100 within a week.
Yeah.
Wow.
Hey, I follow your Twitter very closely, Willem. Like 100,000 people, 90,000 people do. And you tweet a lot about some different investments you're doing. Are there any, I mean, I know you're very private about the individual stocks in the Commodity Discovery Fund. Are there any picks that you feel comfortable sharing with the audience?
Yeah.
Something that you're comfortable with?
Yeah, of course, you all know there are very few listed silver stocks around. Mm-hmm. Sorry, but this is a situation now. We used to have a quiet office. There's such an incredible volume of inflow. The thing has been ringing non-stop today.
Is that your phone, or is that an alert on your computer?
No. It's the phone, and people downstairs pick it up, but they are not on the call. So,
Yeah.
To come back to your question, there's so few good silver names, listed companies out there which have quality. So I'm very hesitant to mention names, but we like to play the silver market through the ETFs, the SIL, SILJ. But there's one stock I think which has a lot of quality and which I can advise, and that's MAG Silver, MAG.
MAG, MAG.
MAG Silver.
Okay.
Yeah. MAG Silver it has been responsible for world-class discovery. Actually, this project is being developed together with another major producer. And they just published a press release today, giving an update that they are about to start their production. And they came down quite a bit in the recent correction. So I think MAG Silver is one of the more, well, reliable names.
Okay.
We should warn people watching this, because in the commodity markets, once something gets popular, you see a few dozen companies changing their name. They used to be an iron company, and suddenly they are a lithium company, or they say we're a silver company now.
Yeah, I've seen that.
And we know from previous bull runs, everything with the name gold or silver in it was being bought up. So especially novice investors, they should try to avoid buying names they don't understand, because there are a lot of crooks and criminals out there, especially in Canada, who will try to take advantage.
Yeah, like those guys in Edmonton, like Edmonton, yeah.
Yeah, Vancouver as well. Yeah. So stick with the ETFs. You have a basket then, or stick with some names you have well researched. And MAG Silver, I think, is a reliable name. And,
SILJ is a favorite ETF of yours.
Yeah, because it has the smaller names, but also the SIL, of course. And but people can get really burned. Look what happened at the first start of the Silversqueeze with First Majestic. It shot up and then it went down 50%. So this is a volatile market, and investors should be careful. And well, of course, I'm a fund manager. I run a fund. We always welcome. We're always happy to welcome Canadian investors. We can't welcome US investors, unfortunately, because of the tax rules by the IRS. But you better play this through an ETF or a fund, because if you start to select funds yourself or companies yourself, it's difficult. It's a difficult game.
Another thing I wanted to share with you, back to energy. I'm sorry for jumping around like this. We've noticed that a lot of power plants, different types of factories are having to shut down. This is just one example I pulled up. I've also seen reports in China that they've shut down a lot of smelters that make magnesium in order to save electricity, which is now affecting aluminum production, which is affecting everyone, because some of the aluminum production is projected to run out of magnesium in November, in the coming weeks. And it seems like what you were talking about earlier, everything's connected, is really piling up into something catastrophic. I mean, do you think that they're going to work this out, or is there real danger here?
It's pretty scary because everything is connected. And as I said, there's so many dislocations now. So when there's a shortage in magnesium, well, we're commodity guys, we watch all this stuff, but magnesium is such a small market that we even don't know how the supply and demand numbers are for magnesium. But if there's no magnesium, you can't make aluminium, and then the food industry has a crisis. So it's really getting scary. And I think it has all to do with the debasement of currency and with all the stress we see within the system. And as an investor, it's getting scary, but it's also bringing lots of opportunity, because if you're positioned well, you can have huge runs with the shares you have. We're up this month, 16%, 16%.
Wow.
And last year we had 5 months of double-digit returns back to back.
You were 85% last year, right? 85%. Yeah.
But it's very hard to play this as a novice investor. And like I said, you should be in it to win it. Our strategy is very simple. We've been researching worldwide for the last 10 to 15 years, looking for all quality discoveries, metal agnostic, whether it's copper, silver, zinc, or uranium. If it's one of the most significant discoveries, we'll take a position. And we always had this long-term view. Let's put our money into something we understand. There will be shortages along the way. We don't know whether the shortages will break out in 2015 or 2020 or 2025, but we will be positioned to enjoy this era of shortages, of scarcity. And it's starting to play out now. And we try to trade as little as possible and just keep the track. Only start new investments once we see a better discovery than we already have in portfolio. As a fund manager, this is much more easy than as a private investor, but because as a private investor, most of the time you don't have unlimited funds. So you only have limited funds and you want to play every rally, and then you switch and then you miss the other one. And we have quite a bit of money, so you can position yourself among quite a number of plays, and then you're always into one of the few hits out there. And as a fund manager, you're a long-term investor. You know, we don't want to sell. Our assets under management is growing every week, every month, every year, and these are people who will stay with us for years. So there's a very nice position to have as a fund manager. And we experienced the downturn. We had the worst bear market in commodities of the last 100 years. Between 2011 and 2020, there was a horrible downturn. And unfortunately, we survived that one. But now we're looking forward to a decade of a strong bull market in commodities, because it's a no-brainer. You have the shortages hitting many metal markets. Then you have the debasement of currency, sending people to all the government can't print. So we have a perfect storm developing within our industry. And then silver even still has to start its bull run. And gold just started. So there's so much. I'm looking forward to the next decade, but I'm getting nervous about all these imbalances now. And I'm also getting nervous about all these people who are not as fortunate as we are, that we can invest our money, we have extra savings. How many people won't be able to buy enough food or energy, not just in the West, but in other places worldwide as well? How many people lost their jobs because of the corona crisis? You know, they lost their savings. How many business owners lost their shops or their restaurants or their savings? And you know, I always tell the Bitcoiners, I did an interview on Bitcoin earlier today, and you know, the Bitcoiners always say, have fun staying poor. But you don't want to be rich in a world where your neighbor can't survive. It's getting
there's some real ugly. And inflation is like the biggest part of it too. It's the hidden tax. Do you know, Jack on Twitter, I know you're all over Twitter all the time, and I'm sure you saw Jack's little comment about hyperinflation. And then a lot of economists were criticizing him, saying, oh, we don't have hyperinflation. But you know, and then I saw another guy, Happy Hawaiian, his comment was, it doesn't take hyperinflation to ruin your life. I mean, 50%, 25% year over year inflation. You're done in 2 or 3 years. I mean,
I always say this in interviews. It's not about whether we are in hyperinflation. No, we are not in hyperinflation, but you don't want to be in hyperinflation. If you're in the very first stage leading to hyperinflation, that's where it gets serious. And I think that's what Jack, the CEO of Twitter, is referring to. We're on the verge of hyperinflationary trends. And if uranium is jumping 50%, if gas is jumping 400% within weeks, these are hyperinflationary moves. And look what's happening to food now. Or I was rereading When Money Dies about the Weimar Republic, and it feels the same. You know, there was a shortage of labor in the early years of Weimar. There was a shortage of labor. Well, what do we see now? Shortage of labor.
Yeah.
Willem, with how big of a bubble we are in, are you surprised it hasn't popped already?
Well, it popped. It popped in 2008, and then we said we were in a credit crisis, and then global debts, all total of global debts was less than 200,000 billion, and now the global debt bubble is 30% larger. It's 300,000 billion. So when we had a credit crisis with 200,000 billion of debts, how do we call the current situation? So this system popped already in 2008, and the only way to stay afloat was to start QE worldwide and bring interest rates down to zero. And now we're stuck. You know, I have a friend here in the Netherlands. He used to be a central banker, and he was tweeting last week, the ECB is trapped. You know, these are former central bankers saying the ECB is trapped. Well, great story. But what to do next? Nobody knows. And the scary part is we've seen many times we've seen hyperinflation develop, but this was always in one country or one region, and we never have been in a situation where we're in this together. You know, we see we see debasement of currencies everywhere. So this is the first time in history that we could end up in hyperinflation worldwide. But of course, I don't want to make people too nervous, and I always tell the audience that we shouldn't be too worried, because central bankers know this as well, and they can do one thing, and there's only one thing they can do to bring trust back to fiat money, and that's to revalue gold again and bring gold back into the system.
They'll never do it. They'll never do it. They don't.
No, they did it in the 1930s.
Yeah.
And I think they will need to do it. If you reread the Big Reset, actually people can download this for free on our website. If you reread the Big Reset, my base case scenario is a revaluation of the gold price, because central bankers will need to bring trust and sanity back into the international monetary system. And why would they revalue gold? Because all central bankers have gold in their central bank vaults, except Canada. Actually, there's a rumor Canada is buying gold again.
It was an error. It was a data error from the World Gold Council.
Okay. Well, but then every country in the world except Canada has gold.
I have more gold than Canada does.
But they don't have Bitcoin in their vaults. So there's no use for central banks to switch to Bitcoin like some of the Bitcoiners expect. But there is some use for central bankers to revalue gold. Look at the US balance sheet, the balance sheet of the United States of America. There's 8,000 tons of gold on the balance sheet, but still valued at $40 or $42 an ounce, the historical cost price. So if you revalue this gold to $4,000 an ounce, look what happens on the balance sheet. There's only 11 billion of dollars of gold on the balance sheet, but then it will jump to over 1 trillion. So you can help the balance sheet. Central banks can help themselves and the financial system by revaluing gold.
But if they did that, for everyone else to accept that the new price is $4,000 an ounce or whatever they revalue it to, wouldn't they have to reopen the gold window and actually do transactions at that price?
Sure.
But you can't just say it's 4,000. Someone has to trade it at that price, right?
Well, when this happens, there will be a press release Sunday evening before Asian markets open that from the start of trading, central banks worldwide will buy gold for 4,000 or 8,000 an ounce. And what will silver do then? Silver will follow.
Yeah, probably silver to gold ratio. You know, let's say it's 50 to 1. Yeah, it could be interesting, huh?
Yeah. No, and that's why we have 15% of our portfolio in silver-related assets.
Yeah,
you got to be in it to win it. You know.
Yeah, it's too late. Once they make that announcement on a Sunday evening, it's too late to buy. You better have been in the previous week, huh?
Yeah, then it's too late. And that's why we have 5% of our fund in uranium, because we knew it would run, but we didn't know when. And the same goes for silver. So you position yourself and you hope to enlarge your position once the story breaks and the price starts to move.
Yeah.
But it's very difficult to play this as an individual, as a private investor from your home.
Yeah.
Yeah.
So Willem, like we're talking lots about miners. What are most investors missing right now? Like how big is the upside for the miners?
Well, I think there was a great thread on Twitter, Tavi Costa. I don't know if you know.
Tavi, yeah, Crescat.
Yeah, he's the best analyst in our space, in the precious metal space. I think currently is. He's the best analyst sharing his research, well, to each and everyone. And he had a great series of tweets, I think yesterday, about the valuation on precious metals markets and on companies. And it's also to be found on Crescat's website. Mm-hmm. I'm also honored to learn that Crescat started a new fund and they became discovery investors. You know, they copied our model. They're investing in all the best discoveries in the precious metal space worldwide. Yeah, there it is. And I post a few of those slides. It's an amazing job he has done. And everybody should follow this guy on Twitter. He's a Brazilian guy. He lives in Denver, I think.
Yeah.
And he's a very kind guy, and he's smart, intelligent, and what he sends out, you know, for free, it's incredible. Study these charts, and also if you study the chart books published by Incrementum from Liechtenstein. These guys also publish lots of material and research.
Oh, you're talking Ronnie Stuffalo, right?
Yeah. Ronnie Stuffalo. He's our Austrian friend.
Yes.
And Mark Valek, and they publish some great free research as well.
Yeah, he does the Book of Gold. Is that what he calls it?
Yeah. Every year he has this chart book. And it's amazing research. And if you study these charts, you have all the answers, you know. Yeah. The valuation of gold and silver miners compared to financial assets is still near a 100-year low. Actually, the precious metals producers, it's the only space where you can invest that the free cash flow is higher than inflation.
Yeah.
Wow.
It's incredible. So the upside after the recent correction, which started in August last year, which sent most shares down 30-40%. Many juniors were down 60-70%. And now we're breaking out. Gold and silver are breaking out from the downtrend, which started in August last year. So from an Elliott wave point of view, I don't know if your chart is, but from an Elliott wave point of view, the rise last year was the 1. Then you had the correction 2. And now the 3, move 3 is starting, and move 3 is always more powerful and will take longer than move 1. And move 1 was like 6 months, and it brought us 150% higher. So move 3, which is starting now, in my humble opinion, will be a very strong move. And I think it's starting now as we speak. You know, look at what juniors have done and majors. They're up already 15-20% like our fund. And I think this will continue into next year, and next year will be very strong for the precious metals market.
Yeah, hey, you're speaking to the choir. This is like this is like catnip for our audience. We love to hear it. Ivan, you got a final question for Willem? I know he's only got a few more minutes for us.
Yeah. No, I just want to say thank you so much, Willem. We really appreciate having you on. Like it was absolute pleasure. Learned lots.
Yes, thank you very much, Willem. We always appreciate your time. Our audience loves to hear from you.
Always welcome, guys. Cheers. You got to be in it to win it.
Got to be in it. Yeah.